How will the tariffs impact the companies you own in your portfolio? Of course, in the meantime, the stocks have been impacted, and that's an understatement. But let's talk about a couple of popular names: Amazon, Palantir, Tesla, MercadoLibre, Uber, etc. We'll discuss all of that in this video. Of course, today, on Monday, at the time of making this video, the market is all over the place, right? Pre-market, we've had some comments from Europe saying that, okay, we are willing to come to the table and negotiate, although we do have, well, tariffs of our own ready just in case. Then the market opened extreme red. A couple of minutes later, extreme green, because there was a report or a leak or fake news came out and said that the tariffs might be delayed by 90 days. 10 minutes later, well, that was debunked and the stock market went down. Now, I think yesterday in a video and in a live stream, I did say that I think a lot of countries are calling the United States right now, and that the April 9th deadline will get extended because they don't have enough time to go over each and every deal. So where there's smoke, there is fire when it comes to that fake news that came out. Of course, in the meantime, it's going to be a roller coaster of a ride. And so before jumping into this video, if you enjoy this type of videos, hit all the buttons. We really appreciate that. And I really appreciate all the support you have shown me in the last couple of days. It's been extremely hectic, but the reaction has been quite good, quite motivating as well. So thank you very much. I'll be here to provide more data. Again, I don't have a crystal ball. I might be right, I might be wrong. And if I'm wrong, I'll admit that I'm wrong. I have zero issues admitting when I'm wrong. As I've shown you in yesterday's portfolio video, my portfolio is down. Some people say, oh, you're not going to show your portfolio anymore. No, each and every week, I'm going to show the portfolio, whether it's up or down, because that's what we do here. Now, of course, I would love if the market goes up, which again, one positive headline and the market soared, right? The market soared with just one positive headline. So this might be a small hint as to what might really happen if those headlines actually are coming, right? If really there's going to be an extension or if deals are going to be made. Of course, if not, then lower can always go lower. So hit all the buttons, we really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment, hit the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. All right, so screenshot number one is this. That was a heat map when everything was green. When suddenly that rumor came out, everything went green from deep red to deep green. I think at one point SoFi was up 10%, Micron 11% or something like that. So this looked extremely good, right? This looked extremely good, especially for those that did buy the crash last week. This was very nice to see, but it didn't really last long, right? It didn't really last long. I mean, look at the contrast of just a couple of minutes, extreme volatility. And I mean, whoever is trading here is making quite a lot of money here, right? I mean, Apple, Nvidia, look at those swings, Amazon, even Palantir, SoFi as well. This is nuts. But we have more data here. We have more data, and let me remove myself right here so you can see all of the figures. So this again from Subutrade on X. We've been going over these data points the last couple of videos, been extremely helpful, although the odds are in our favor. So far we're yet to see a big win, let's be honest. So if you look at the S&P 500 after RSI falls below 20, which this is where we're at right now, look at what has happened before, and then we can say, okay, maybe this might happen again today or in the next couple of days, because these are the probabilities for the next day up until a month later. We're going to have a look at a couple of months later and a year later as well. But here as well, the odds are in our favor, right? 1 day later, 67% of the time we're going to be green. 2 days later, 79% of the time, then 71% of the time, 3 to 4 days later, and then 1 week to 1 month later, 67% of the time we went green. So the odds are in our favor, although, yeah, we might be in the 33% here. If we look at a couple of months later, so if we have 2 months later, 3 months, 6 months, a year later, well, the odds are still in our favor, although not that great either, right? Previously, we've had to look at data points from the VIX, for example, and there our odds were closer to 80, 90% or so going green. But hey, the more data we have, the better, let's say, our predictions will be. So here, if we look at 2 months later, 63% of the time we went green. Same for 3 months. 6 months later, that's 67% of the time. And then a year later, 79% of the time we went green. Now looking at the dates where we were red, well, deep red, 24.23% was here June 12, 1969. 2001, of course, close to 16%. And then we have a couple of 9% here. And then in 57, that was 3.44%. But on average, you're up 10.68%. So again, odds-wise, those are in our favor if you look at these data points. Now, of course, we are in uncertain times, right? We don't know what's going to happen. Again, like we've seen a couple of hours ago, one positive headline can change the whole thing. And that's the big difference today compared to a pandemic, compared to, well, 2021 or 2022, shall I say, where interest rates were going up, inflation was going up. Today, you can actually control the narrative. Today, you can say, okay, you know what, tariffs, the percent that we've shown doesn't make any sense, which, let's be honest, they don't make sense. We're taking it down to 10% across the board, and then we're going to make our way maybe a little bit lower depending on the agreements between countries. Could very well happen. I'm pretty sure the market will react quite positively to that news, right? Every positive headline that will come out will probably push the market up and up. Of course, the contrary can happen as well. Now let's talk a little bit about specific companies. All right, so first up, AMD. Funny story here, I had a conversation with someone and talking about semiconductors and AMD more specifically, and he said, yeah, what does AMD actually stand for? And I said, Advanced Money Destroyer, without even thinking twice, because I didn't really think about the real name, right? Advanced Micro Devices. Fun story. Anyways, indirect risk here for AMD are tariffs on components that will increase the cost for servers, networking equipment. AI chip adoption may also slow. Economic risk, of course, a recession could reduce data center demand, could also reduce PC demand. Now, how do they mitigate the risk here? They're benefiting from US manufacturing via the CHIPS Act, which might also disappear. Well, let's be honest, it wasn't really such a big deal. It was a nice small amount of money that the companies got. But if you really want to have a competitive edge, I don't think that $56 billion for the entire semiconductor industry was really going to move the needle. But okay, so here again, the examples are TSMC, Micron expansions in the United States. Now, for AMD specifically, we can look at where they generate the majority of their revenue. Well, contrary to what you might think, the United States is the biggest segment, but not by far anymore. If you look at China, including Hong Kong, it's basically $2.4 billion difference between China, including Hong Kong, and the United States. Then you've got Japan, Europe, Taiwan, and Singapore. And actually China has doubled, close to doubled, let's say, from 23 to 24. So you have probably a bigger China risk with AMD. Now, moving on to a non-semiconductor player, PayPal or PayPal. So here, again, you might say, PayPal, what do they have to do with tariffs here? Yeah, there is indirect impact, right? A recession might reduce e-commerce transaction volumes across the board. Retail challenges such as Walmart and Target could trickle down to payment processors. Now, the shift to online shopping may boost digital payment demand. With a PayPal, just like with other players out there, it's really about probably consumer sentiment, right? Consumer spending, shall I say. If we go into a harsh recession, then people will probably be inclined to spend less, and that probably will be impacting a company like PayPal. Now, a company like Nvidia in the semiconductor industry, just like with AMD, so chips are currently exempt from tariffs at the moment. That might change, of course. Chips integrated into products from tariffed regions such as China and Taiwan could hit demand. So a bit of the same with Nvidia as with AMD, and of course both of them still have to answer to those exports control. Now, with Nvidia, with AMD, with those big players, to be honest, right now, as long as there are no big tariffs or no tariffs on the semiconductor industry, they will just fall because the overall market falls. It's in the same bucket, so they will get hit. The long-term future of those companies, I think, is still very, very bright. And here, if we look at where Nvidia generates the majority of their revenue, well, by far, the United States is the biggest chunk, right? The big four companies make sense. China is big, but it's not the same mix as we've seen with AMD. I mean, China did increase 70% from 24 to their fiscal 2025. But look at the increase from United States. Then you have Taiwan. And of course, that Singapore story here as well. A very, very big increase year over year. But here as well, indirect impact, probably, right? Some components that might come from countries that did get hit with tariffs will hit companies like Nvidia, like Intel, like TSMC, like Micron, and all of those companies, and AMD, of course. So you have to look at the big picture, right? Because sometimes it's not a direct hit, but an indirect hit. Same way here with SoFi. So indirect hit, fintech and lending segment, a recession could lower loan demand, for example. Now, on the flip side, I mean, if you lower interest rates, maybe that might actually be a good thing, right? But then again, they do have like a bear case scenario where inflation is still high, interest rates is not dropping, I think. Unemployment is above 5% or something like that. That could definitely negatively impact SoFi. But we are far, far away from that scenario at the moment. So they say here, higher risk from tariff-driven inflation may strain lending business. Yeah, that's definitely a scenario. Of course, we've seen lending grow back. We've seen financial services actually grow much, much faster than that. So SoFi right now is, of course, a much better business today than it was a couple of years ago, a bit more diversified as well. Now, the advantage here for SoFi is, of course, the digital first model that may adapt faster than traditional banks. Yeah, SoFi has a bank, it's not a bank. It's a digital one, let's say. Up next is the big guy, Amazon. So mixed impact here. Scale allows cost absorption, but imported goods, for example, electronics, may face higher costs, probably not just electronics. So price hikes for TVs, smart home devices will likely see price increases. Now, you've probably seen these reports where a big part of Amazon sellers have now been Chinese ones. So that might be a problem for Amazon as well. So the economic risk here, slower growth, could hit digital ad revenue. Could be, of course, digital ad on Amazon itself, for Prime, for other things. And AWS hardware cost may rise. Again, indirect impacts. Now, the advantage here is that pricing power makes Amazon a relative winner versus smaller retailers. Remember, it's always the same thing, right? The big guys, the guys that are profitable, that have, pricing power, during tough times, they win. They'll usually always win, and they'll come out of this situation as a stronger company, whereas the smaller ones might be destroyed. And here, looking at Amazon, where they generate the majority of their revenue, North America. North America is where they generate the majority of their revenue. Then it's international revenue, and then it is AWS, which of course has been growing the fastest, which again makes sense. AWS, again, indirect impact. The other ones, the online stores, sales, and all of that, might be impacted. Moving on to Uber. So Uber here as well, indirect impact, because what are you going to put tariffs on Uber rides? No. Indirect impact, service-based model, less affected by tariffs on goods. Recession could reduce ride-sharing demand. Fuel prices may rise with trade disruptions. Although right now what we've seen is that, crude oil is coming down and coming down quite rapidly. Now, the advantage here is that their US-focused operations limits exposure versus manufacturing firms. I mean, Uber, I think the large part of their revenue does come from North America, if I'm not mistaken. North America, then probably Europe. But Uber, there is, again, indirect impact. If we are going into a recession, maybe people will order less from Uber Eats. Maybe they'll just walk. Maybe they'll walk. They won't order an Uber anymore. So those are the impacts here. And then, of course, the advertising business. So advertising, spending on advertising could impact a business like Uber, Amazon, Meta, Google, etc., etc. Tesla. The direct impact is the 25% tariff on foreign-made cars components, reliance on China and Mexico production. So yes, Tesla is very, very well positioned. But as Elon Musk has said, there's still going to be impact because some parts do come from the areas that are hit by tariffs. So that's going to hit Tesla as well. Apparently, according to some projections here, cost increase impact, $2,500 to $5,000 added to low-cost US cars, up to $20,000 for some imports. Now, the economic risk here, of course, across the board, and that's what we've seen actually for a while now. Recession may reduce EV demand if prices rise. Now, the advantage here is, of course, US production and Musk alignment with Trump may help long term. Well, so far that has not been playing out, right? So far that has not been playing out. Moving on to MercadoLibre, one of the best companies, in my opinion, in the world, best management out there. So direct impact, 25% on Mexico, key market, disrupts supply chain for electronic goods. Economic impact could be political economic turbulence in Latin America, so Brazil, Mexico, Argentina. Now, the opportunity here is that there is going to be maybe a regional trade shift that may benefit Latin American economies, a more diversified model such as MercadoLibre, e-commerce, payments, logistics helps. Now, most of the Latin American companies only got hit with 10% tariffs, I believe, so the lowest possible scenario. And some of them, such as Argentina, are already talking with the US administration to maybe go to zero. Now, with MercadoLibre, where do they generate the majority of their revenue? Well, you can clearly see that Brazil is by far the largest market for them. Then you've got Mexico, then Argentina, and then the other countries. So yes, it is important to know where certain companies are generating the most revenue from. Moving on to Palantir, here as well, I don't see how they will get impacted that much other than, well, a recession, which then could hurt the companies that Palantir is working with or potential companies that could be working with Palantir in the future. They're going to need to cut down on costs. But then again, you might say, okay, but isn't that why they should be going to Palantir, right? To help them become more efficient, more competitive. So Palantir here, again, one of those names, software names where the stock gets hit because one, it's probably still expensive, although it was in the 60s, so it's becoming more and more interesting for me. But as a whole, I mean, if you look at where they generate their revenue from, government is still the largest part here. Then you've got commercial revenue as well. And I mean, yeah, commercial since 2020 has grown faster than government, although more recently government has started to pick up the pace. And you might say, yeah, but the US government might want to spend less on defense. Okay, that might be true. But software spending has been extremely low. And I don't think now is the time to start being, well, greedy when it comes to spending on software, spending on AI. And so I think Palantir here will still be a big winner. Moving on to Google Alphabet, this one just becomes cheaper and cheaper by the day. Here, okay, tariffs on electronics will increase costs for cloud data center equipment. Same for Microsoft Azure, same for AWS. Of course, reduced ad spending in a recession is a possibility, but I still think that advertisers will still advertise if the return on investment makes sense, right? If right now, thanks to AI, thanks to all the advancement that Google and Meta have made, if you're going to spend $1 and you're going to make $2 or something like that, why would you stop, right? If you can continue to do that, why would you stop advertising? Even in a recession, because even in a recession, believe it or not, people are still going to spend money. People are still going to buy goods and services. So if your return on investment is so good, why would you stop, right? And I think you might even, maybe if you can, of course, if you can, you might even increase your budget because you know that, okay, maybe my competitor is now spending less, so maybe that's an opportunity for me. Could be. But all in all, I mean, Google, Alphabet, even Meta, what are people going to stop watching YouTube? Are people suddenly going to stop searching on Google? No, right? Probably not. So again, stock goes down, it's already cheap, can go cheaper, can go lower. But buying opportunity in my opinion. Then Apple. Apple, of course, has been hit now, has been hit quite a lot. And finally, it becomes a bit cheaper of a stock. So the direct impact here is, of course, the heavy reliance on Chinese manufacturing, such as Foxconn. 34% tariffs on Chinese import could add $8.5 billion in annual costs. Now, of course, when we look at, well, what will happen, price hikes, potential 26% increase in iPhone and MacBook prices if costs are passed to consumers, or if they start building in the United States, but then again, that's going to take a while. Then I think that the iPhone will cost $3,500, okay? Then I've also a month ago had a Tesla price target of $550, and now that's at $315 because of brand damage. The brand damage, you could have said that a month ago, Dan Ives, but I guess now that the price of the stock is down, it makes sense to say it, right? Yeah, okay. Anyways, Apple. So Apple, yeah, could get hit. I mean, if we look at the revenue generated from China, it actually peaked in 2022, as you can see right here, $74.2 billion. In the last 12 months, $64.6 billion. So revenue generated from China is down by $10 billion, while Americas is basically flat and Europe has actually grown close to $10 billion. So whatever China has lost, Europe has taken. But of course, they still use China and now a bit more of India to actually produce the iPhones. Then the last one here is Alibaba. So we've talked a little bit about Alibaba in yesterday's video. So limited direct impact since the majority of their business, 70 to 75%, is in China and will not directly be affected by US tariffs. But the other part, the international side of things, that is of course at risk of getting impacted from those tariffs. Again, just because it is an international segment does not mean that the majority or 90% of that international segment, right, AliExpress, etc., does come from the United States. No, parts of it, yes, but not all of it. Now, of course, again here, indirect impact, Chinese economic slowdown, trade war, weaker yuan, could hurt domestic sales, supply chain cost may rise, which is basically what has happened in the last couple of years, right? Everybody thinks, oh, China is going to take over. The Chinese economy has not been doing great, which is why companies like Alibaba have been hit, which is why we've talked about LVMH and their exposure to China and why that's also being a bad thing for them. So yeah, if you think that China is in a luxury space right now where they can afford to continue to, have an economy that doesn't grow and actually face deflation, think again. But going back to Alibaba specifically here, again, tariffs, since the majority of their business is still Taobao and Tmall Group, which is China commerce, very limited impact overall. Now some might say, oh, but what about the listing risk? I just don't see that happening, to be honest. So overall, that's about it. Yes, some companies are going to be impacted directly, some others indirectly, and then some cases is just wait and see. Let's see what happens with the US economy, with the global economy, recession, no recession. Let's wait and see. We don't know. We can just make assumptions. Now, of course, I can talk about other companies here as well. Netflix, for example, stock comes down. People think, oh, recession, Netflix. People are still going to watch TV shows, okay? People are still going to pay for the Netflix subscriptions. Maybe growth in subscribers might be slower than before. But then again, for the long run, is Netflix a loser? I don't think so. Now, if you've got other companies you want to ask questions about, tomorrow, Tuesday, as always, we're going to go live, 12:30 p.m. Eastern. There you can ask even more questions. So that's about it for me in this video. Have you been buying something or selling? And by the way, remember, every time you sell, someone is buying your shares, just so you know. Anyways, that's all I've got for you right now. If you enjoy this type of videos, hit all the buttons and I'll see you all in the next one. Bye-bye.